Morrison here, and welcome to another YouTube video. Now, over the past few weeks and months, a lot of my subscribers have been asking me to. I've been posting a lot of videos with trades that I've taken, showing my wins and things like that. But most of my subscribers, they're interested in trading the stock market, and what they've been asking me is, they say, "Hey, Luron, how about you show us some videos before you take the trade?" So a lot of people want to be able to look at the trades that I'm about to take versus the trades that I've taken, and they want to see if they can, follow some of the analysis both technically and fundamentally, and perhaps even take some of the trades that I'm taking. This is not financial advice, but definitely at least you'll see what's my train of thought when I'm taking some of these trades. So this video is to do just that, to provide you guys with some guidance as to what is it that I do when I'm looking to make trades. So for this week coming up here in the following week, there's three particular stocks I'm looking at very closely, and these stocks are Dollar General, represented by the ticker DG. There's Disney, represented by the ticker DIS, and then there's ROKU, represented by the ticker ROKU. So these are the main tickers that I'm looking to trade this week or next week, depending on what the stock does. Now, let's look at from the technical standpoint, and we'll dive into the fundamental standpoint afterwards. So as you can see here, DG has been on an uptrend for the past few months, for the past couple of years. And this stock has gapped up here. If you notice, there's a breakaway gap, and I don't think this stock will close this breakaway gap anytime soon. This stock is still in the markup phase of the market cycle, so this stock will continue to make higher highs. But as you notice here, since last October, this stock has been in a wedge formation. Look here, from October, there's a flat bottom here, and it's been in a descending wedge. And as of late, the earnings is coming up the 12th of March, and you can see here the stock has jumped out of the wedge formation. Now, when a stock climbs out of the wedge formation, this is a bullish signal, guys. If this was a bearish signal, this stock would have jumped out the bottom here of the wedge, and it would have probably looked to fill the gap below. Now, in this case, for DG, the stock is it has jumped out of the web formation, and we have earnings coming up in, just under a month, guys, on the 12th of March. So with this one, I could already start connecting to show you guys where exactly the stock is going. You can see from these 2 points connecting, this line is already projecting higher. So this stock is looking to go to between 160, 170, at least before earnings. And once the earnings are announced, you can either pull back based on the results, or it can keep on pushing up. So that's why I'm targeting this stock. My strike prices for this stock will be 160. I usually like to split my expirations. It'll be 160 and it'll be 165. That would be my target for D&G. So if that's something that you guys are looking to consider, these are some of the analysis that I'm actually looking at for this stock. Now let's look at some other metrics for this stock. So D&G, for example, let's look at their revenue, guys. So this is investing.com. You can go here. I like this app or website because it gives you a good visual in both red and green as to what the stock is doing. So as you see here, Dollar General, December 5th was the last earnings, and the stock did well for its earnings per share. It did 1.42 versus the street of 1.38. So that was a clear beat on the EPS. Now the revenue was also a beat. You can see here $6.99 billion versus 6.9. And the key thing that you want to look at here, guys, is the forecast. So for March 11th, this stock is forecasting 2.01 on their EPS, and it's forecasting 7.15 billion. If you look back on the history here of this stock, these are both all-time high numbers. So both 7 billion and 2.1, they're all-time highs. So this stock is forecasted to do pretty well, and the best it has ever done in its history. So that's not a bullish signal, guys. Also, we could skip over to Yahoo Finance. Let's type in DG here, Dollar General. And then Yahoo Finance, you can do tons of stuff here, guys. You can check your options, you can check your financials. So today we'll be looking at the financials, just at a high level. So you can see here, it's 2017, the stock made 21 billion, 2018. All these numbers are in thousands, by the way. So everything that you see here, you need to add another 3 zeros to it, right? So 17, 21 billion, 2018, 23 billion, 2019, 25 billion, and then the trailing 12 months, meaning the forecast for the next 12 months is 27 billion. So this stock is clearly on a growth spurt. So these are companies you want to definitely pay attention to, guys. Cost of revenue is not too bad. You know, you look at 15, 16, 17, it's going up by $1 billion actually, but it has grown by $2 billion. So cost of revenue is definitely lower than the, gain, the additional revenue that the company is making. Gross profit also is in line based on the past years. What else we got there? It's actually even lower, because if you got 7.8 billion here cost of revenue, and then we also got 8.2, so that's just a 400 million growth there in the cost per revenue, which is not too high. Another key number here, guys, is the operating income and loss. Seem pretty stable. The next number we want to look at is the net income. So the net income is after you remove all your expenses, operating expenses, that is. So we got $1.6 billion versus 1.5, 1.5, 1.2. So we definitely have growth for the net income, which is a plus. And EPS, the basic EPS, we definitely have growth in EPS, 4.5, 4.6, and 5.99. So that's pretty good in that area as well. Now the EBITDA, we definitely have growth in the EBITDA as well. So that's the overall. DG is looking pretty good in my eyes. And finally here, let's look at Market Beat. So this is a site that I also go to get some of my analysis done from the fundamental side. So let's look at DG. So Dollar General here. So this gives you the company profile. I won't go through stuff that I don't need here today, but let's look at analyst rating, guys. So as you can see here, 22 analysts on Wall Street have rated this stock, and if you notice here, for today, they're recommending a buy, 30 days buy, 90 days buy, 180 days buy. Consensus rating score 2.7. For me, anything over 2.5 is pretty good. As you can see, this stock has a pretty good score across the board. So the consensus from these analysts is basically 162, just over 160 upside. There's some decent upside on this stock. So let's go back to the chart here. So on average, they're saying 165 is a good consensus target price for the stock. It'll be way over that, guys. But maybe after before the earnings, it can sneak up to about 160, 167. And after the earnings, I expect, once it beats earnings, I expect the stock to continue to uptrend. So like I said, guys, that's the analysis I'm providing today for Dollar General. Now, you guys may be asking the question whether or not I'm taking trades on this stock. You better believe it. This is exactly one of my formations. Like I said, this is a wedge formation, descending triangle, and the stock has broken above the resistance line. So this is resistance all the time, and now the stock has broken. We have 1 point, 2 point, 3 points on the resistance, and we have 1, 2, 3 on the support. That is a clear textbook definition for what a wedge is, and now it has broken out. So today is a holiday in both US and Canada, so I won't be I'll be doing some foreign analysis, but tomorrow, you better believe it, tomorrow morning before the trading session, I'll be putting a trade on this stock. As you guys know, I trade options, so I invest smaller amount of monies to make larger amount of gains. I'll be trading this stock at 2 strike prices, one at 160 and the other one at 165. So my first target at 160. As soon as this pushes up a little and I'm making about 100% of my money, I'm out on the first target. which usually covers my second target. So even if I fail on my second target, I already locked in some profits and covered the first leg of the trade. And then 165 will be my second target. Once that breaks 165, I'm out of the trade, guys. That's how I do it. So let's look at the next trade here, or the next stock that we're looking to trade some options on. And just another reminder, guys, you can trade options or you can just trade the stock directly for these stocks that I'm marking up here today, guys. So it doesn't matter which one you want to trade. So the next one is Disney. So Walt Disney is the next stock I want to look at. So as you can see here, we have an uptrend in triangle, uptrend in rectangle going here, guys, and then we have multiple triangles coming within the stock. So let's look at this segment because that's what matters to us as the stock moves forward. So Disney, as you guys know, Disney Plus was announced sometime last year, and Disney has went on a run ever since. And this stock has been uptrending. Now, the last earnings, which occurred, let's see here, on the 4th of February, I know a lot of folks, I was following most people on social media, they expected this stock to just blow through and continue to uptrend after the earnings just recently. But it didn't. And a lot of folks want to know why the stock didn't just, move higher on earnings. And the reason for that is simple, guys. This stock is in a wedge formation. Look here. It's up and it's been trending down. It also made a connection to the bottom of the wedge and then reported earnings. Guess what? The stock just made another connection on the top of the wedge. So this stock will continue to traverse within this wedge and then break out to the upside. That's exactly what this stock is doing. Now, institutional investors and market makers, they know exactly what they want to do. And I've been tracking hundreds, if not thousands, of these stocks to see their behavior during the earnings report and when they're in the middle of a wedge formation cycle. So this stock will continue to finish this wedge formation. I can see the stock going up, touching the resistance one more time, and then it'll come back down, connect with the support, and then it'll just break out. So two things you want to watch for to trade this stock. It might not happen this week, but I think it'll happen next week or the following week. So this one is kind of a longer play. You just want to keep your eyes on. So two times you want to jump in on this stock. If this stock should push up and get outside here, outside of this support, outside of the triangle, you definitely want to get in. Watch for some consolidation. It might sneak its way out, consolidate for about 3 to 4 days. Any pullback that stops right on here, this means that this previous resistance is now a support. You definitely want to get in. Any consolidation outside there and a pullback to this line. The second option is this stock will crawl and make its way down to this support line. You want to make sure that it closes the day right on this line. And as close it gets to this wedge, the more explosive it becomes. If it touches the bottom here now, I won't be excited to get in as yet. I expect it to go back to the top, and I expect it to touch here again, closer to the peak of the wedge. But once this blows out to the wedge, guys, time to trade. Now, my target price on this one will be, anywhere entry between 144, and I'll be looking to get out, anywhere between 150 and 155. This stock, no doubt, this stock will be on the upside, in a month from now. So keep your eyes on this one, guys. Just to go over let's take a look at the fundamentals quickly. So on the fundamental side, let's see what analysts are saying about this stock. So we have 24 analysts provided rating on this stock, and overall they're saying this stock is a buy from today all the way to 180 days out. The consensus score is pretty good as well. It's over 180, as you can see here. Their target price is 160, 155, and this is pure upside, as you can see here, for this stock. So there's no question that Walt Disney's is in a good position to move to the upside. If we look at their past earnings performance, EPS on February 4th was 153 versus 146. That's pretty good. Revenue 20 billion versus 20.86 versus 20.7. So this stock has been beaten. They had some poor performance or some small misses on the revenue side in the past few earnings, but as you can see, it's right on the money. It's not too far off. Forecasting is not higher than it is, but let's look at May, because a lot of these stocks are they're seasonal, so it depends on the season that will determine their revenue. So let's look at May, the previous May. So previous May they had 1.32 EPS, they had 1.58, so the forecast is actually lower. 19.46 billion, 14 billion. So that's certainly a lot of growth in their revenue from this quarter versus this quarter, even back to this other quarter. So definitely some upside here with Disney, and it's one of Wall Street's favorite stocks to trade as well. So that's another reason why you want to keep your eyes on this. But from a technical standpoint, guys, look at this last wedge formation here, blow right through. And with these wedge formation, you'll easily make 4 to 5x on your money, and you can get out. I mean, you can make more, but that's usually my target. So you invest $1,000, you can easily make $5,000. I'm talking about a couple of days to a couple of weeks holding your money here with stock options. So that's what I wanted to talk about from Walt Disney. And the last one that I want to go over here, guys, it's ROKU. So ROKU has been in a rip for the past few years. You can see here, 2019 was a very aggressive year for this stock. It was, purely uptrending. We had some markdown here. That was September last year, and then since the markdown, the stock went back up, to test the highs again closer to the end of the year. And then since then, the stock has been in a wedge formation. You guys may have noticed that I'm talking a lot about wedge formation, because this is one of the most powerful technical pattern that you could ever trade in the stock market. Like 80% of the stocks that I trade is stocks that are in a wedge formation. So I trade them when they touch the support in a wedge formation. I trade them once they get outside of the wedge formation. So as you can see here, this stock has been wedging since November last year. And then now we're in February, and the stock is looking to get outside of the wedge. So you can see this big black candle. Well, not black, it's red, but this will be considered a black candle, meaning it's an aggressive pullback. So this stock is outside of the wedge formation in a bullish setting, meaning it's on the top side of the wedge. So this is an indication that this stock wants to go higher. Now, this stock reported earnings just last week, and that's where this big red candle was created. First, the stock started open very high at 150, and it closed all the way to 130. So that's a 20-point move to the downside. But these are institutional investors just playing games with the market. Now, they know that everyone knows the stock wants to go higher. So that's why they sold off. They didn't just allow the stock. Because here we got to remember, guys, institutions want to buy low and sell high. They want to sell high and buy low. So considering all the buzz, let me show you the volume. The volume on this stock is 63 million stock shares traded last week when the stock reported earnings. This is one of the most active stocks on the market right now. So what the institutional investors did, they said, okay, everyone wants the stock to go up. Watch this. We'll just sell off. And that's what they did. They sold off. But watch, guys, this is the resistance line, and it's now support. The stock didn't break back down into the wedge. The wick of this stock just touched inside the wedge. But where did it close? Close right there, guys, at 130. Now 130 is above this line, which was the previous resistance. Now it's acting as a support. So that's the clue that the institutional investors left on the table. So if you're a smart investor, you know what you're doing, you'll recognize right away that this stock is bullish. This stock will be going up. The next thing that this stock has that will be filled is a gap. Look here, guys. We have an exhaustion gap here from 160 all the way to 152. This gap will get filled. this stock will take off, come back up to 150, and then it'll fill the gap. Now, once it fills the gap, it could either fill the gap and go, or it could fill the gap and reverse. It doesn't matter. All I'm saying is, look at this, guys. Let me measure it to show you the potential with the upside. All the way up to the gap, we're talking about a 23% upside. The only bad thing about this stock is it's very pricey. If you look at the strike for March 6th, you're talking about 8.9 you have to pay for at the money. However, I got one target here. As you notice here, I got a buy order sitting at for March 6th at 150. So I'm saying basically with my option, I'm buying this contract here. My strike is 150, and I have 3 weeks for this stock to get to 150. If this stock breaks 150 or approaches here in the money, I think I'll be looking to it'll be about 5-6x my money ROI. So that's the analysis I want to show you from a technical standpoint for ROKU. So let's pull up ROKU's performance for the past few months. So as you can see here, the last reported earnings is February 13th. EPS, the stock just was leveled with the market, 13 cents. And the revenue side, the stock did pretty good. You see $411 million. If you look at the last February, the stock has basically doubled its revenue. So the stock is definitely growing. I think the stock is still experiencing losses, as you can see here by the negative EPS. But this is definitely a growing stock, and it's a hot play right now on the market. So the forecast is a little lower. It's a little downbeat, and that can be seasonal as well. But the stock is a growth stock, and it's definitely a stock you want to keep your eyes on. Let's see what the analysts are saying. Let's go ROKU. So for ROKU here, analysts, buy. So on 21 analysts on Wall Street have issued rating for this stock, and the price target is basically $200, but on average they're saying $130. That's what they're targeting here. This is one that I don't buy too much, because this stock has proven to beat all of Wall Street analysts' target price over the past year. So this stock has more of an upside than what is shown here, guys. But it's consensus buy, and the rating score is above 2.5, which is what I like to see. Here you can check headlines and things like that. So that's it in a summary, in a nutshell, guys. Let me show you the chart. So ROKU, that's what ROKU is looking like long term. And as you can see here, there's a nice bottom, and the stock is basically at the bottom, and also it's above the wedge formation. So for me, the stock is going on the upside. It has positive earnings. I see no reason why the stock will break down here. Now, everything that I showed you guys here, I know we haven't talked about risk management, but with ROKU, if ROKU should pull back into this wedge formation and break the bottom here, guys, get out. There's nothing more to see or do. If the stock should break, like, you can draw this line on whichever program you're using to trade. You can draw this line, and if ROKU should break below this line, get to 120, whatever you're trading, whether it's stocks, whether it's options, you get out. The stock is moving to the downside. So let's look at the next stock, Disney. Same with Disney. See this line at the bottom here, guys? If Disney should break below here and finish and close below this line, below 135, that's a good point. You want to get out the stock. Now, you need to forecast this line further, because the stock might consolidate for a while and then come down. And as you can see, this wedge will be extending further. Just extend this line further, guys. And if Disney should break below this line and finish and close below the line, time to get out. That's a bearish signal. That's a bearish signal. So you want to get out. And lastly, for risk management on Dollar General, same thing here, guys. You see this line that is drawn straight through the bottom here? You just project that line all the way higher. And if this stock should come below that line and close at the end of any day, trading day in the next week or two, you don't want to get out your position. Now the expectation is that the stock will continue to rise higher. So that's my analysis on these stocks that I've presented here, guys. So that's Dollar General, Disney, and ROKU. So I hope this analysis was good for you guys. I hope you guys learned something. I hope you guys can take this information and make better trades in the future, or whether it's on these trades, because this is some insight as to how I trade the stock market. I like the wedges. I like both the technical and the fundamental side. I don't get too deep into the fundamentals unless I'm buying a stock for a more longer term period. But I focus mostly on the technical side, guys, because the chart, everything is in the chart. I use the fundamental just to validate what I'm seeing in the charts. So, for example, ROKU, it's looking positive, it's looking bullish. I look at my fundamentals just to see what they've done lately with their revenue, what their balance sheets are saying, what their income statement is saying. A lot of people try to make you believe that you gotta know a ton. I mean, you can do simple YouTube videos and you can learn about balance sheet, income statement, and things like that, and just know the fundamentals about it, and then it can make your trades better. So I'll wrap things up here, guys. Hope you guys find this video interesting. And as always, if you find the information valuable, please leave a like, please leave a comment, and don't forget to subscribe to the channel, guys. That's how we can grow the channel and I can continue to provide great content. So until next time, bye.